Hello, everybody, and welcome to the show today. So, for those of you that are attending live, I'm a little bit late because I had some technical issues with YouTube Live today. For some reason, it was not playing nice with me. But that's the always the concern of doing live video is that you never really know how things are going to play out. So, I'm really glad everybody could join us today. We're going to be diving in. We're going to be talking about financing. So, we're actually going to be spending some time today and talking a little bit more about how to get money, how you can get anybody can get money for your business. So we're going to be talking today about exactly how you can do this, how you can succeed getting money for your business, even if you are just starting your business, even if you are an established business, whatever the case may be. We're going to talk about scenarios that may work for you to be able to get money. So if you'd like to get more information on getting money, feel free to go to creditsuite.com/get funding. We never charge you a dime to get money for your business. Of course, lenders and lenders, credit issuers do charge you, but we negotiate that to help get you the best deal anyway. So if we can ever help you with funding, feel free to give us a ring, 877-600-2487. That's 877-600-2487, or feel free to send us an email, which is info@creditsuite.com. So look, conventional banks are not a good place to look for startup financing. And this is probably one of the biggest mistakes that I see business owners typically make, is that when I talk to business owners and say, where would you go to get money? They say, I'm going to go to my bank. Well, banks aren't going to help you. Like a Chase, a Bank of America, a Regions Bank, those banks are just not the places that you're going to want to go to get capital, because what usually happens is they don't want to touch you as a startup. So here's what happens. Banks request 2 to 3 years worth of tax returns from you for a reason, because they know as a startup you won't have it. So ultimately what they're basically telling you is that by default, they won't touch you unless you have 2 to 3 years of bank statements. When I say this statement to a banker, they always correct me and say it's 3 years. So I'm being conservative here saying 2 to 3 years, but most banks are 3 years tax returns before they're even going to consider lending you money. If you're lucky, you might not even get a single credit card from them, because again, if you're not well established, if you don't have excellent personal credit, if you don't have established business credit, if you don't have time in business, it's very tough to be able to get approved. This is why nearly 90%, 89% of business applications are denied by the big banks. And what's crazy about this, if you really think about it, is that, it is when most kind of financing that's out there, 90% of businesses fail because they can't get access to capital, but yet 89% of businesses that are applying are getting denied. So to me, that's just interesting that that statistic is almost the same, that 90% of business owners fail and 90% of business owners can't get money when they go to apply. I think that's a telltale sign that not being able to get the money is one of the reasons that those businesses fail. And that's the reasons that are basically shown on every survey on that topic. So SBA loans are also difficult to qualify for because the lender and SBA both underwrite the deal. So let's be honest, the first time when you go into a conventional bank like Bank of America, you're getting an SBA loan. Bank of America doesn't offer business loans for small businesses that aren't backed by SBA, because they know that most business loans, or most business owners, or most businesses go out of business. They know the default rate's high. It's too risky for them because big banks focus on conservative risk. So again, they're only offering SBA loans. So you have to keep in mind, when SBA is involved, you're qualifying with the bank and SBA. So to be approved, all aspects of your business and the business owner's personal finances must be perfect. And that's virtually impossible for a startup. Your personal credit has to be good. Your bank credit has to be good, which means you have to have at least 10 grand or more in the bank to even have an acceptable bank credit score to get money from the bank. Your business credit score has to be good. You have to have collateral equal to 50 to 100% of whatever you're borrowing. You need to have tax returns that show good financials, your revenue increasing, profits every year, balance sheet, P&Ls. It's just virtually impossible for newer businesses to have all that information. So try to stay away from cash flow financing as well. Look, they generally want you to be in business for a year, and they want to see over $10,000 a month in deposits. You've seen this before. You've seen this on Facebook and almost anywhere nowadays that you talk and hear about business lending. Revenue financing, revenue cash advances, this kind of product is being advertised, and you'll know it because all lenders say the same thing. You got to be in business 1 year and have $10,000 a month in revenue. Those are the two things that you'll hear in order to be able to qualify for these type of loans. So again, if you're newer in business, if you're starting up, well, you definitely don't have those two things. You're not in a position where you even have the ability to have that revenue revenue or have that time in business. So you can't do either as a startup venture. So that kind of money is not going to work. The other thing to keep in mind here is the rates can be pretty high. The risk on these type of loans is high. So it's 40 to 65% interest is what you can end up paying. And don't get me wrong, that's not a bad deal if you're going to turn around and make a ton of money with the money that you're borrowing, right? If I can like borrow 10 grand and invest it and make 50, well, then it makes sense no matter what I pay on the money. But the bottom line is, if you're not using the money you're getting from this kind of financing to immediately start making a greater return, it doesn't make sense. The only way this kind of financing makes sense for anybody, because the rate's so high, typically, is for you to be able to come in and make sure that you can basically use the money to buy or do something with it that's going to make the company considerably more revenue. So private investors usually want 2 to 3 years of tax returns as well. Venture capital is not an option unless you have a truly groundbreaking product or service. And venture capitalists don't come into the scene as a startup either. So, you can't get venture capital until you've probably already got seed money from startup or to get it from angel investors, and you already have a product. You're already making sales, possibly even making profits. So VCs want to see quick returns on their investment. They want to see you exit in 3 years. So that's not typically something that even a startup business, for example, is going to want to qualify for. And even if you do qualify, you'd still have to give up a considerable portion of ownership as well. So what can a startup do? Well, fortunately, there are options. Any startup can get these, but it's ideal to play to your strengths and the company's strengths. And this is what I tell everybody. Look, you have to understand when it comes to getting money that banks only care about one thing: that you're going to pay them back the money that you borrow. That's it. Every piece of documentation that they get from you, every question they ask, every dive that they dig deep in, it's all based on one thing: how likely are you to pay them back? And the better the strengths that you have as an individual or the company has, the more likely they feel that you are to pay them back, and the more security they feel that they can take assets if you don't pay them back. So again, there's funding to match the strengths. I think one of the hardest things that people do is they don't know which strengths to focus on. So let's take a look at one of my favorites: unsecured business financing. So this can provide some of the highest loan amounts for startups. I'm saying some of, but I've been doing this a long time. I've been in financial services for 18 years. And I can tell you that in all of the applications and the credit reports and everything I've looked at, this is the highest approvals for startup financing that I've seen by far. I've never seen startups get $60,000 to $120,000 with any other product outside of this one. So it's the highest loan amounts and line amounts that I've seen. You get 0% financing for 6 to 18 months, but that's perfect, especially if you're in a newer stage of business, because if you're in a newer stage of business, you need the payments to stay as low as possibly you can. You also get stated income. It's what's called no-doc financing. You don't need bank statements. You don't need tax returns. So no-doc is very important for people that are in a starting phase of a business, because no-doc is what you need to get approved. Any full doc deal that wants bank statements and wants tax returns, you're not going to qualify. So you need to go no-doc, and this is a no-doc financing option. So no financials are required either. These accounts that you're getting report to the business credit reporting agencies. That's what CRA means. So what's nice about that is not only are you getting money, but you're building business credit at exactly the same time. And building a business credit helps you get more money at better terms. And it also gives you the primary accounts you need, the 5+ accounts that you need initially, to have the best chance of then building your initial business credit profile and score to be able to come in and get more. Now, this will get you access to even more money, again, without the guarantee once you start building the business credit. So you can usually get, and I say loan, but I mistyped, it's actually credit line. You can get credit lines for about up to 5 times the amount of your highest revolving account now. So if the highest credit limit account you have now is $5,000, multiply that times 5, you get 25. That's about what you can get, 5x of whatever your highest limit account is. I say up to 150. In all fairness, I have actually seen approvals over that. I've seen approvals as high as 160, but typically people are getting between 50 and 150 grand. It's the highest amount of financing. Again, you're going to see as a startup, 5 times what you're probably going to get on your own if you try to go to a bank, and you can get cash out on this program. So these are credit lines. You get 0% financing, the benefit of credit cards, but you could take all the cash out. You could physically take the cash out So if you have a credit line for 100 grand, you could take 100,000 out in cash if you actually want to do so. So there will be no impact on your personal credit with this type of financing when it's actually reporting, because it's reporting to the business reporting agencies, not the consumer. There are inquiries when you initially apply and get approved, not when you apply. Like to send you into the lender, there's no inquiry. It's a soft pull. But once they start applying and getting you the credit lines, then there are pulls. But that reports to the business credit reporting agency, so there's no impact on personal credit. You need about a 685, 700 type FICO score or a guarantor that has one. So even if you don't, mom, dad, grandpa, friend, potential investor may. With good credit, you can get unsecured credit cards again without the guarantee. So, well, as you build this up, you're going to be able to get more business credit without the personal guarantee and credit check. So unsecured business financing, my favorite. It's the easiest to get because all you need is good credit or a guarantor that has good credit. If you don't, that's okay. It's something to work towards. We'll have plenty of other options to go through. Unsecured credit cards with good personal credit. So these are just regular credit cards. These are, and I say good credit, but there's kind of two. You can go to a Capital One of the world that's a 620 credit score type card, and then the Bank of America, the Barclays, those where you can get 10 to 150,000. They're real business credit cards that you're using personal credit to be able to build. Now, these report typically on the business credit reporting agencies. There is some that report on the personal as well. So you have to keep that in mind. Whenever you're getting any kind of credit card, my advice is to always ask the credit issuer who they report to. And if the person you're talking to doesn't seem to really know the answer, like if you don't get off the phone and go, that dude knew what he was talking about, then call back and talk to other people. Okay, last time I did this, I got an application for PNC Bank and I called and said, who do you report the payments to? And the guy said, we use Experian Consumer to make the decision, and then we report to Experian and D&B Commercial. That's a really detailed answer of somebody that really knows what they're talking about. So I got my answer there. It's always a good question to ask because in that case, I just learned something I didn't know. I didn't know PNC only looked at Experian Consumer. I learned something by asking the question. Ask where they report. Some report to consumer, some report to business. Guys, it's extremely important that you do this. I can't tell you how many people get a Capital One Spark card, max it out, and then ruin their consumer credit because it reports to their consumer credit reports too. Ask every business credit card company if they report to consumer or commercial if you don't know, because you need to get the ones that report to the business reporting agencies. Now, these are typically going to want Barclays, Bank of America, pretty good personal credit, low inquiries, and approval amounts are going to be equal to current limits. And again, your 0% rates are going to be there on a lot of those as well. The 9%, if you're getting it directly from the credit issuer, you're not going to pay any kind of fee on that. You're just going to pay whatever their interest rate may be. Okay, now, there are also unsecured credit cards with good business credit as well. So we just talked about how to use good personal credit to get unsecured business financing, which are credit lines that build your business credit. Then we talked about using your good personal credit to get credit cards with that some report to consumer, some report to business. Now let's talk about getting away from consumer credit. Let's talk about what happens if you start to build some business credit. So personal credit quality no longer matters now. Collateral no longer matters now. Cash flow no longer matters now. All that matters is that you already have some accounts reporting on your business credit reports. Approvals are 10 to 50, could be higher. The highest approvals I've seen are 50, and they come from Amex. Although Chase Inc. is approving these right now, PNC Bank is approving some of these right now. So those sources change all the time. Now, these report to the business reporting agencies, and it take you about 6 months to build the initial business credit profile to qualify. Tons of training on our YouTube channel to teach you how to do that, by the way. And personal credit's not used for qualification. So here's the way I explain this, is that, look, you need a lendable strength to get money. So what is a typical strength? Cash flow, credit, collateral. 3 C's, cash flow, credit, or collateral. What if you don't have that? What if your credit sucks? What if you don't have the collateral and you don't have cash flow yet, or you're not generating, or you can't prove it yet? Well, then what I say is that if you don't have a strength, make a strength, create the strength. That's what we're doing here. We're saying, okay, look, what if you don't have cash flow credit or collateral? Well, then let's build a strength. How do you build a strength? Let's create business credit. We build a business credit profile and score, and 6 months later, you're getting auto vehicle financing and Visa and MasterCard to Amex without a guarantee and without a credit check. You just built the strength. That helps you get even more money, and you're able to get these high limit credit cards based on that strength that you just built. And again, approval amounts are equal to current limits that are established on your business credit reports at that time. Typical rates of what you're going to find on a normal credit card. So this really is the revolving credit. We talked about a credit line. We talked about credit cards with good credit you can apply for. We even mentioned Capital One Spark. One that with a 620 you can still get in there and get a business credit card with an average credit score. And another one is Wells Fargo Secure Credit Card. That one helps you build business credit. It's a 620 type approval to get approved. You don't need great credit. Average credit will do, and you're still able to get it. Then we talked about this option using business credit to get revolving accounts at 10 to 50. Well, there's a lot of loans as well that you can get, but they're just not usually coming from banks. And typically it's 25, 50 grand, maybe even higher for startups, or even under 100,000 in initial funding that you're going to be looking at. So you want to get specialized financing first to buy what you need to get the business started. So here's an example. Equipment financing and leasing is available to buy or lease equipment. You can get it even as a startup. So one of my friends was opening a really cool concept where what they do is handle all the office supply, all the office work and the marketing for doctors' offices. And she came in, she said, this is how much money I need. And I said, what do you need the money for? She said, I need a loan for like $50,000. And I said, what do you need the money for? And she said, well, 20 of it is to buy a big piece of equipment. Hear me very carefully. This is one of the biggest mistakes that I see business owners make. I said, what do you need? She said, I need a loan for $50,000. First of all, a loan for $50,000 as a startup is very difficult to do because she's a startup. She doesn't have a lot of things established to get it. But when I said, what do you need the money for? She said 20 of the 50 is for equipment. Well, she doesn't need a loan for $50,000. What she needs is an equipment loan for 20 to start. And that's what you want to look at. If there's specific financing for specific needs you have, go with that kind of financing because it's better off to find financing for the specific things that you need versus actually trying to get 50 grand from one bank, which is harder to do. So equipment financing and leasing is available, financing for a startup, leasing for 1 year in business. And you can get loans, for example, to put up commercial signs if you want to do that. Or you can get financing to buy inventory if you want to do that. You can get financing for graphic wraps to actually wrap vehicles with graphic wraps. You can get money to fulfill purchase orders. So that is money being used for specific kind of purposes. And that becomes very important. The other place you should think about this is with business credit cards. I just told you, you can get up to $10,000 to $50,000 cash credit cards in 6 months building your business credit. But I didn't tell you what happens during the process of building business credit. When you're building business credit during month 2 to month 6, you're getting Amazon, you're getting Walmart, you're getting Apple, you're getting Dell. So we're back to this concept of thinking about what you need. In her case, my client and friend's example, she got 20 for equipment, and then she got the unsecured business financing she could use for any purpose. And then she started building business credit to get the Office Depot for office supplies and the computer for Apple. What I'm trying to tell you is use your money sparingly. Getting a loan or a credit line from a bank is not easy to do. And so you only want to get what you need and use it only on the things you can't use other money for. Don't use a credit line for $50 to buy $20,000 worth of equipment. What we did in her case was we got her equipment financing for the 20. She had to put down the first and last month's payment as deposit. We got her financing and she used her credit line to put the first and last month's payment down. That's smart. She used the credit line for first and last month's payment and then got financing for the equipment to save the credit line to keep it intact. Same thing for you. Don't go use a credit line to go buy a bunch of furniture from Amazon when you could easily get an Amazon corporate credit card in 60 to 90 days and use that instead. It just makes a lot more sense. So collateral-based loans, okay, they are your best bet as a startup because you can basically use assets as collateral. Rates are super cheap, 5% or less, which is pretty crazy when credit doesn't even matter and revenue doesn't matter. So that's a really low rate, and it could be based on collateral you may already have. So again, existing inventory, account receivables, customers that are paying you on terms, a 401k or IRA, stocks or bonds, for example. Okay, so with these are assets or collateral that you may have or somebody else around you may have. Maybe dad has it, maybe mom, maybe grandpa, maybe grandma. What I like about that is statistically 75% of business owners get money from family and friends. Well, it's much easier for you to get somebody to come in and be able to let you leverage their asset as collateral than you are going to have of them giving you cash. So if I'm going to my dad and I'm saying, Dad, look, I got this great idea for a business. I want to get it started. I need 10 grand. Well, then if dad gives me 10 grand, he has to take $10,000 from his own money, right? That's 10,000 less he has access to. That's less interest he earns. That's problematic all the way around. But if I go to dad and I say, hey, you've got a 401k, you've got an IRA, you've got stocks or bonds, can I leverage that as collateral to get my 10 grand? You still keep it in place. You still earn the interest. And then I'm able to get a super low rate. And the only way you're adversely affected is if I default. Well, you just made it a lot easier for dad to give you 10 grand. Now dad can give you 10 grand, still keep his stock, still earn the interest. Your rate's lower than what it would be in almost any other kind of financing. And the only reason dad would get affected would be if you default on the loan, which, let's be honest, if you default and blow his 10 grand, he'd be out that money anyways. So you're creating, using assets as collateral to get financing, you're creating a scenario where it's much easier for other people to invest in your business. So even if you don't have these assets, it still opens up a lot of options because, again, you can still use the guarantor's assets to be able to qualify as well. So things to think about here. So again, you can ask a family member or friend who has those kind of assets. They may leverage it in exchange for a percentage of ownership in the business. So you may say, I don't want to go to dad and ask dad for 10 grand. Well, does your idea suck? Do you think you can run a business or not? Because if you really think you have a good idea for a business and you plan on it being a success, you've looked at the variables, you've developed the business plan, well, then it's kind of irresponsible for you not to bring it up to the people around you, because there's a lot of the people around you that are sick of investing money in the stock market, and real estate's inflated. So they may say, look, I'd gladly give you that 10 grand, but I want to make 15 grand on my money. I want to make 12 grand. I want a 5% ownership stake in your business. So again, don't feel like you're mooching and asking people. You can make this an investment opportunity for people. You can give people the opportunity to invest a little bit of money now, in the future have a possibility for significant returns. This is called angel investing. And there's angel investing, there's two kinds. There's affiliated and unaffiliated. Affiliated angel investors means you're going to people you already know to get money. And unaffiliated angels, people you don't know, will give you money when they see that other people you know have given you money. Like, why not? If you have a good concept and a good idea and you come to me as an angel investor and I know you've got 3 or 4 of your family members and friends to give you money, that to me gives me some security. It gives me some peace of mind to know the people that believe in you and know you best are willing to take money from their pocket and invest in you. So things to think about, again, because again, you can use the people around you, use their assets as leverage to get the money, even give them percent ownership in the business, and they'll usually want a much smaller percentage than you ever would with actual venture capital. Now, securities-based financing is using stocks. This is when you're using stocks or bonds to get money for your business. You can get up to 90% of the value of the stock in financing. You continue to earn interest in the stock, so nothing changes there. And then closing and funding takes place in less than 3 weeks. Rates are super low, less than about 1.6 to 5%. It's working capital line of credit. You can also choose to get a loan. Credit doesn't matter on the personal side. So this is something I call the 3 C's formula: cash, credit, collateral. Lenders usually only want to see one of the 3. In this case, collateral is what we're looking at. The stocks are collateral. So because you have one of the three collateral, you don't need the other three, which are cash flow or credit. Very important what I just said, because if your credit sucks, then you want to focus on lenders that will give you the strength of lending based on collateral or cash flow the other sees. If your cash flow sucks, well, then you want to try to make sure that you have good credit or collateral. Okay. The problem is when you don't have any of them, well, then you want to build business credit, as we talked about, and build that asset. So in this case, the strength is collateral. So cash flow doesn't matter. It's no doc, and personal credit quality doesn't matter as well. Now, with 401k financing, you can use your 401k as collateral to get financing based on IRS proven strategies, so there's no tax penalties. You still earn interest on the 401k. You get rates less than 5%, and you close and fund within 3 weeks, and you can get up to 100% of what's rollable. What's rollable means what's not with the current employer. It's not the lender's fault. It's the employer's fault. If your 401k is with an employer now, the employer might not let you use that 401k for other reasons. So whatever's rollable, whatever's not typically with an employer, is money that you can use. So we had a client that tried to get $50,000 to grow his bar. He had already had a bar. He was trying to grow it at his bank. His bank turned him down. He was a retired police officer that had over $500,000 in a 401k, and we got him $500,000 in financing with like a 3% interest rate when his bank wouldn't even approve him for 50. That's the power of having access to that kind of financing. Low rates, easy to get because it's not based on the cash flow. It's not based on the credit. And I don't really say up to 200% anymore. I used to, because it's what you put into the 401k. Then I'm like, that's not really 200%. Meaning it's up. You can get up to 100% of what's already in there, or you can get 200% financing on the program if you put a bunch of extra money in. So I still consider it to be about 100%. So they basically just setting up a new business for you. And I won't go through all this. All they're ultimately doing with 401k financing is they're just basically setting up they're basically just rolling the stocks over from investing into other companies into investing in your own. It's really the easiest way to explain that. So AR financing, account receivable financing, using your outstanding account receivables for financing. You can now get as much as 90% of your account receivable advanced to you in 24 hours. Account receivable is just simply when people pay you money on terms. So our clients that enroll with us they have an option of paying monthly payments, right? So they may pay $3,000 to work with us on the business credit side, and then they finance that over 7 to 9 months. We let them make payments over 7 to 9 months. That is considered account receivable. Somebody is financing it with us. They're making payments on the full amount. Well, that can be used as collateral, and you can borrow as much as 90% of that. Now, here's what you need to know. If you don't have account receivables, don't write this option off. It means you should start accepting them, letting your customers pay you on terms. This is the most common asset that's used for SBA loan, is account receivable. It's the most common asset that people looking to buy your business want to see if you have to want to buy your business. So like, it makes you a better buying, a better potential company to buy, and it also helps make it easier if you get SBA loans, amongst other things. Plus, let's be honest, it helps you make more money because it makes it easier for your customers to pay you. And who cares if they're paying you over 7 months if you can use this financing and get the most of the money advanced to you within 24 hours. So the remainder of the up to now 90% of financing that you can get comes to you after the actual invoice is paid, closing in a couple weeks, rates as low as 1.33%, lowest rate funding program I've ever seen. And again, personal credit doesn't even matter. And you're talking about interest rates under 2%, which is pretty insane to be able to get. So again, receivables should come from the government or business. It's hard as an individual to use account receivables from individuals, from people. If it's another business that owes you money or the government, that's the best. Also, if you have purchase orders, you can get financing to have those filled as well. And that way you don't have to use your cash flow. And that's what we're talking about here. So if you need to fulfill purchase orders, instead of using your own money to buy the supplies to fulfill the purchase order, you can use purchase order financing to get the money to fulfill that purchase order, so you can ease your cash flow. You can keep your cash flow where it needs to be. Now, you need to be in business about 1 year, but now it's about 6 months with account receivable financing, just so you know. So inventory financing, use your existing inventory as collateral. You need inventory of about $500,000 or more, or need to be buying inventory inventory, and you can get a line of credit for about half of the value of the inventory with rates as low as 5%, closing within 3 weeks. And again, you can get, with this, you can also be able to come in and get different kinds of inventory will work. So as long as you have inventory on the shelves, now some kind of inventory is not going to work, jewelry, stuff like that could lose value, like electronics over time, but everything else can work really, really well. So equipment financing, get financing to buy a lease equipment, use your first and last month's payments to be approved. Rates vary widely. I mean, I've seen low rates here of 8%. I've seen high rates on equipment financing of over 65%. It's insane. But again, what it really comes down to is just how much of an actual benefit how much of an actual benefit it saves you. And the case where the guy actually paid 65% interest, he bought a tree distumper. He was building a golf course, and he bought a tree distumper, which apparently pulls tree stumps out of the ground, which I hope I'm calling it the right thing. And it saved him like $15,000 a month because he didn't have to pay individuals to do it. The machine did it for him. So in his case, he didn't care paying 65% interest. He was still saving 15 G's a month and wrote off all the interest. So again, rates vary wildly based on risk. Typically, average credit is what's needed for approval. Lender and on equipment financing or equipment sale leaseback, you can use this too to borrow against equipment you are own. So let's say grandpa, dad, you has a piece of equipment like a backhoe that you're willing to use as collateral. Well, you can get up to 50% financing using that as collateral, major equipment only. Lender's not going to combine a bunch of small equipment for this to work. Loans up to $2 million. That's what equipment sale leaseback is. You own the equipment, and you're basically leasing it back to the lender and paying payments where it's yours once those payments are paid off. So investors looking to buy and flip properties can get financing as well. Okay, you've got to have cash on hand because they're going to want you to put some into an escrow account. You got to have experience, 2 or 3 recent flips, average credit or better, 620 FICO score. But if you have those, well, then you can get financing and be able to buy properties, to fix and flip properties. Now, you can get financing against commercial real estate as well. You could borrow against commercial real estate or get money to borrow and buy commercial real estate. Insurance agents, if you're an insurance agent or you're buying an agency, you can even get book of business financing as well to use the book of business that you have as an agent as collateral to get financing. Now, business credit, we kind of briefly talked about, it's useful at every stage of the business, and it should be your goal to build your business credit even if you can get funding elsewhere. Look, you have to. I mean, business credit's as important to you as a business owner as consumer credit is to a consumer. I mean, it's going to determine the rates and terms you're going to pay on loans, credit lines, and credit cards. It's also going to determine whether you get approved or whether you get denied financing when you go to apply. Like, not building business credit is ridiculously irresponsible because it will catch up with you. You're going to get denied a lot of the financing you could get, and in getting it, you're getting a lot of the money that you need to grow the business anyways. So it's going to help you for years to come because you're able to get credit cards to buy the stuff you need. It helps make you more lendable as well. Of course, this is credit that's linked to your EIN, not your social. You don't need to have the personal guarantee with this. It's available regardless of personal credit quality, and you can get it immediately even as a startup. Now, this is the only way we talked about that you can get money when you don't have the collateral, cash flow, or credit, or a guarantor. Remember, we talked about a lot of options here based on you having one of those, cash flow, credit, or collateral or a guarantor. If you have none of those, business credit's really the only solution that can work. But you want to build it because anybody can see your reports, and you need business credit to get loans, to get the best terms on loans. You can get high limits really quickly. I mean, you can get $10,000 limits in 60 to 90 days, regardless of personal credit. That's kind of crazy. You don't need a personal guarantee. You don't need a personal credit check. It's really one of the fastest ways to get money for your business if you can't come in and get one of the loans that we've talked about here today. So several kinds of credit in this umbrella. You're going to start with vendors that will actually help you build initial business credit. These are people that will give you credit and report it to the reporting agencies. Now, not all vendors do report, but you can buy stuff like office supplies, shipping supplies from these kind of vendors. And then typically in 30 days, they report. Some report quarterly. So I always say the average is 60 days to report. And people ask me, how long does it take to build business credit? And I always say it's just really 3 rounds of credit is what you're getting. And every round takes 30 to 60 days just based on how long it takes them to report. Typically, they're reporting in 30 to 90 days. days. So they help you build your business credit profile and score, which is the goal of vendor credit, right? The goal of vendor credit with places like Uline and Quill and Wells Fargo Secure Credit Card I talked to you about, and places like Granger and Gimplers is now reporting again, although they're off and on. The nice thing about them is you could buy stuff you really need for the business. So we have clients that buy advertising, that buy marketing, and buy marketing. They have flyers printed. They have yard signs done. Like, they're actually advertising and marketing their business using credit that they're getting from these vendors. Then the vendors report the credit to the business reporting agencies. That gives you accounts reporting, a profile, and a score. And that's what helps you get store credit. Now, store credits after 30, 60 days, $2,500 to $10,000 limits. Dell, Amazon, Walmart. I call this retail credit. I call this the retail credit tier. And what retail credit is, and sometimes I call it store credit because I consider places like Dell and Amazon stores, but it's really retail credit because any retailer offers this kind of credit. Apple, Chevron, Amazon, Tractor Supply, Costco, Sunoco, or, Costco comes and goes too with whether they report or don't. Sears, Best Buy, these are all stores, retailers. So as you continue to apply for more credit, the limits get higher and higher. So again, this is where you got to think about what you need. If you need furniture, stop trying to get a business credit with IKEA. Get it with Amazon. If you need computers, and get the credit with Apple. Get the credit with Dell. Don't feel like you need to go get $5,000 worth of computers. You need a loan. Use the retail credit tier to be able to get that. Now, if you have a total of about 8 to 10 accounts, then you can start to get fleet credit with high limits. And this is basically auto vehicle repairs. It's maintenance. It's fuel. It's Exxon. It's Shell. It's Fuelman Fleet. It's Wex fleet cards. If you're like me and I work in an office, I don't need these. I don't have any fleet cards in our business credit arsenal. We don't have any because we don't need them. I just drive to and from work. I don't have a fleet of vehicles. But like if you're an over-the-road trucker or you're dealing with a fleet of vehicles or you have vehicles on the road, well, this is a big deal because it pays your auto repairs, your maintenance, your fuel, all of that stuff is basically covered. Now, cash is Visa, MasterCard, Amex. History of handling business credit responsibly pays off here. You need to pay your bills as agreed. You need to have about 10 accounts to be able, or 14 to get here. You want to keep your social security number off the application, not your social and date of birth for verification purposes only, but you still can get this kind of credit all day long without the guarantee and the credit check. You just need to make sure that you're not providing the guarantee or credit check when you apply. You usually need to have about 14 accounts or more to get there, and then there can be time and business requirements with some sources like Home Depot, but not as much. Most of them just want you to have credit reporting and be paying it as agreed. So SBA Startup Loans, bonus number one. You usually need some time in business for these. The most popular SBA loan for working capital, 7A. You get approved for about $750,000. Rates are 2 to 4% above prime interest rate, whatever that is at the time. Everyone with more than 20% ownership stake must be a guarantor. You're going to have good consumer credit here. And again, you can get some light documentation programs. I've always said historically, SBA doesn't offer loans. What they do is they guarantee loans offered by banks. But SBA does have now micro loans under 30 grand that they offer directly. And these are low documentation, good credit loans you can get even if you're in the starting stage of a business. So this 70 micro loan program goes to about 35 grand. Okay, average loan amount's about 10. Funds come directly from SBA, which by the way, when we survey startups, that's the number. 10 grand is what most of them say they need. About 80% is what they say they're looking for capital-wise. Funds come directly from SBA. This is, again, very weird. SBA usually guarantees loans, doesn't offer them, except for these micro loans. But these are much easier to qualify for banks because you're not qualifying with the bank and SBA. It's just SBA. Okay. So again, with a 7A loan, with a typical SBA loan, you got to qualify through the bank and SBA. With these, you're only qualifying through SBA. Second bonus, crowdfunding. So crowdfunding is places like Indiegogo and Kickstarter where you throw up a campaign and then that campaign has other people that donate money to the actual project and you get money that way. So it works best when donors can personally connect. So you need to have something unique, something different, something that they can really actually connect with. Except for an Indiegogo flexible funding option, all platforms give you 0 if you don't meet your goal. So Indiegogo is different because if you don't meet your goal, let's say you're trying to make $10,000 or raise 10. If you don't meet your 10 grand goal, every other crowdfunding platform that we found you lose all the money that was donated. So if you got $9,500 in donations and you didn't get to your goal of 10, you lose all the money. All the money goes back to the potential gifters. So places like Indiegogo offer what's called flexible funding, which lets you actually get your money even if you don't reach your goal. And they usually take about a 5% is how these type of platforms get paid. Crowdfunding platforms push you to deliver on your product or service. Donors can suffer from donor fatigue. So a good, well-written and eye-catching pitch is essential, usually video. And managing your crowdfunding campaign can be a full-time job. So it's just things to think about because you're going to have a lot of questions and inquiries. Now, again, these work because of two things. You line up donors beforehand. Crowdfunding campaigns don't go viral on their own. You got to make them go viral. You're never going to post something on Facebook and it go viral. It's only going to get viral if you get it a lot of shares. And the more shares and likes you get it, the more Facebook shows it. The more Facebook shows it, the more likes and shares you get, right? And the more it goes viral. Same thing here. Your crowdfunding is not going to just go viral on its own. You're not going to throw up a project on Kickstarter and get a bunch of money. What's inevitably going to happen is you're going to need to line up donors beforehand to make it go viral. So they start pouring money in. The crowdfunding platforms see that and they promote it. Okay, so you want them to donate on usually the first day of the campaign, and you need to provide perks for donation levels. These are called bonuses. Virtual perks are better. Downloads, things you don't have to physically mail or deliver to them are really going to work better for you. So bonus 3, more startup loans. Angel Pad. So these are grants. That's for web technology entrepreneurs. Beatspring will give you up to $20,000 in startup funding. Now, the title here is not right. More startup loans. These aren't loans. Actually, these are grants. So you're getting $20,000 for Beatspring. First round capital invests startups into the millions. Jumpstart Foundry will give you $15,000 grant. Launch gives you $500,000. They have competitions that they give $500,000 to. And check your alma mater. They maybe have something. Or and check your local area too. City, state, county. They all have kind of grants too. I love grants because nobody goes for grants. Everybody wants the easy road. And the idea of grants and filling it out, like it makes me think back to college days when you're filling out, applications for colleges, which I actually never did in high school because I went right in the military. But this is what makes me think about, right? Because people don't want to do it. They don't want to fill out the application for the grant, but it's free money. And these sources are all giving grants where the money doesn't even have to be paid back, which is cool. Now, again, there are federal grants as well. So HUD offers one, USDA offers one. Okay, so you're going to have paperwork, but there are options that even these federal agencies, and like I said, local, city, state, town, these are ones that you want to consider too. So grantwatch.com is a great place to find grants, but try your city and state's website. So why would a city say do this? Think about Amazon. Think about what's going on Amazon. You know how many states are giving all kinds of concessions to Amazon to try to woo Amazon to move their headquarters to that state? You've heard it all over the news. So it's the same thing with cities. I mean, if you're going to start a business and employ 5-10 people, in some towns, that's a big deal. So they may want to give you some money to help make it easier for you to do that. Okay. And again, obviously local grants are less restrictive than federal grants. So something to consider there as well. So recap, a startup usually can't get a conventional loan. Don't even think about walking into a bank, but a lot of different options we talked about here. Try unsecured financing or cards. My favorite, up to 150 grand, you need good credit or good credit guarantor, okay? Or secure with a loan with collateral, as we talked about a lot of those options. 401k, stocks, bonds, account receivables, equipment, inventory, any of that stuff can be used by you or a guarantor as well to serve as actual collateral. Build your business credit. You're going to need it. It helps you get the money you need regardless whether you can or can't get any of these other kind of financing. And it helps you get a lot more money at better terms. Remember, all the reporting agencies have a credit limit recommendation on the credit report. They tell credit issuers how much they recommend that you be issued. The more business credit you build, the higher that recommendation gets. So if you want lenders and credit issuers to pull a business credit report from the reporting agency and have a high amount of money that the reporting agency is recommending you be lent, you can only do that by building your business credit, but it helps you when you do. More options are startup loans from SBA. Remember those micro loans. Don't forget about crowdfunding if you have something that's unique and different. Remember, venture capital may work or angel investors may work. And we have angel investor training on our YouTube channel. And also check your alma mater, check your grants, check the federal government, check all these places that I gave you for grants, local, town, city, state, county. Those are also great sources as well to get grants. So don't know if you are better at math than I am, but that was a heck of a lot more than 10. We got into probably with all the different kind of grants and everything else, and business credit, the different kind of business credit, and the different kind of collateral-based financing. I don't know. I didn't add, but I would probably say we talked about 2025, different kind of way that you can get funding for the business, even as a startup. So if you have any questions, feel free to give us a ring. Like, we believe something very simple that most people don't believe in. We just think you should have all funding in one place. And so we work with every legitimate kind of funding program in one place. We never charge you fees. Lenders give us referral fees, some of them don't. And that way you can talk to a finance officer. We could talk to you about all your options, develop a finance blueprint of all the money you can get now. And then we go to work to get you the money. We work with the lender. We negotiate the terms. We get you better terms than you'll ever get on your own because we do a bunch of volume with these lenders. And then the nice thing is we never charge you a dime. Like I said, if we get paid in most cases from a referral fee from the lender. In some cases, we don't get paid because some lenders just don't pay referral fees. But again, for us, it's all about giving you access to the most money in one place. And that's what we can help you with. So if we can help you along the way, 877-600-2487, info@creditsuite.com. Also, you can go to creditsuite.com/get funding. If you found this information helpful, go to the right of our page, creditsuite.com. Follow us on iTunes to listen on the go. I listen to podcasts every morning as I'm doing my morning workout and my bike ride, etc. So again, listen on the fly. There's a lot of great information. It's the only place that we interview some really cool guests that you'll find there as well. And then we post stuff daily on Twitter and Instagram and LinkedIn, and as well as being able to go live on YouTube and Facebook once a week. So a lot of good training. Our Facebook lives, you can ask questions. So we go into all kinds of cool topics, and then you can ask questions and live in real time. I can answer your questions there on Facebook Live. So a lot of different ways that you can follow. So thanks for tuning in. We talked about a lot more than 10, like 20, 25 different ways to get money for a startup. And there's more that we didn't even cover. So if you're interested in getting money to fund the business, feel free to give us a ring. Feel free to go to creditsuite.com/get funding. We look forward to helping you get the money that you need to grow your business. Thanks everybody for tuning in.